Assalamu alaikum and welcome to Millionaire Muslim. We've got with us for the first time a prop tech startup. So welcome to the show, Zishan.
Thank you very much.
Jazakallah khair for making the time, and we're here at Canary Wharf, 1 Canada Square no less, the heart of the startup world.
Indeed, yeah.
And inshallah today we're going to talk a little bit about yielders. But first I just wanted to ask you about your background. Where did you grow up, and what's led you here?
Sure. So half of my childhood grew up in Luton, the mean streets of Luton. High school attended in Milton Keynes. My family moved over there. Went to Leicester University to study economics and management. That's going on about 10 years ago now.
You still live in Leicester?
Oh really?
Yeah.
Oh, fantastic. Nice city.
Yeah.
It is a nice city. And then started my career in financial services, predominantly working in the regulatory financial crime prevention space on some rather large scale projects. I think at the time I'd graduated just as the financial crisis sort of was entering its final stages, and there was a lot going on around anti-money laundering and financial crime prevention. So that's where I really started my career. A number of large institutions, working for a few different banks at the time, which was a really interesting experience, to be honest with you, which is actually where I met Ibrahim, our CEO and founder, and we kicked it off. We had a really good relationship, and used to discuss a number of things, both work-wise, out of work-wise. Ended up becoming quite good friends, and it's one of those things when you realise you've got someone like that in your life, very quickly took on a sort of mentor type relationship with him, because he, alhamdulillah, done very well for himself in terms of his professional career. We ended up bouncing quite a few ideas off one another, as you do in that sort of relationship, and he came to me originally with Yielders, which actually was called Zahma at the time, funnily enough, when we first started out. And I really liked the idea. I thought it was a fantastic opportunity, thinking that fintech hadn't really boomed at this point. We're sort of middle 2015. So he came to me with the idea. I thought it was absolutely fantastic, and it was like, what can I do to get involved? Very much was the conversation that we had. And alhamdulillah, four and a bit years later, we are where we are today. A Series A funding round, and the business has come on leaps and bounds.
Alhamdulillah. And how was it? How was it like at the start? Starting out with Yielders. How long has it been going? And what's the story within Yielders been?
Sure. So the business was actually incorporated late 2015. We didn't actually go live to the public until 2017, following the regulation, which is a story within itself, which we can touch upon. But effectively, it's been just over 4 years. I think the growth is plain for everybody to see at this moment in time. It's been especially over the sort of, I'd say, the last 12 to 18 months. The growth has been phenomenal. It's a really exciting time for us. I've just mentioned with the Series A funding round, which will really help drive the strategy and propel us to an even larger scale. But it's been a hell of a lot of hard work up until now. Let's not lie about that to anybody. On a very, very small budget. So we were actually bootstrapped to begin with. So it was all our own founders' money. And it was just a lot of sweat capital that came with it. Initially we decided to white label the solution to be able to get to market as quickly as possible. And then subsequently years following down to make us more of an investable solution and a bit more of a well thought out and rounded business. We actually own our own technologies, or proprietary and developed in-house as of the beginning of last year.
Brilliant.
But yeah, it's been a very interesting journey, a lot of ups and downs. The startup world has got its jaws, and it's got its fun times as well. What was really interesting for us, I think, at the beginning, we were sort of double hatting. We still had our jobs at financial institutions because obviously we've still got to pay the bills. And then working in the cool, quirky environment that we get to in fintech, it was pretty much an oxymoron, living a double life. You've got the impossible corporate structures where change is so impossible, and a lot of red tape to get anything done. And Irfan and I were both working in change projects, and very much at the forefront of trying to deliver technologically based change in banks. and finding it very difficult.
Good luck with that. Yeah.
And then on the flip side, we come and run our business in the evenings and weekends, and it would be like the fast-paced environment, getting stuff done.
Yeah.
No one to stand in our way, and just really trying to move as quickly as possible, get to market and deliver a product. So it was a really interesting time. Has been a very interesting time.
It sounds it. I mean, I can sympathise as well. Currently in that position right now.
It's not much fun, is it?
Yeah, it's hard work.
I think the tiredness shows.
Yeah. I wanted to talk about, because I know you guys are fundraising as well, so I wanted to talk about the business from an investment perspective as well. So first, what exactly does Yielders do? Because I think some people won't know what that is.
Sure. So Yielders is the first FCA regulated Islamic fintech platform in the UK. And effectively what we do is provide real estate investment opportunities for everybody, from as little as £100. So we've got retail deals on the platform that you as an everyday investor or anybody can log in, create an account, and from £100 invest in a piece of real estate within the UK that's already producing an income. So it's effectively like being a buy-to-let landlord without any of the hassle that's associated with it. So if you generally think about buying a buy-to-let property, you've got a substantial deposit, you've then probably got to go get a mortgage of some sort, and then comes the ongoing maintenance, managing tenancies, which is pretty big headache. And what we've done is strip all of that back, made a very easy to use product online that you're able to purchase as if you're buying something off of Amazon, to be honest with you. We've sort of likened it to a combination of mobile banking and an application like Rightmove, a combination of the two. So that's effectively what we've created. But not only that, on the retail element, we've also got sort of top yielder, what we like to call top yielders, and high net worth deals, so placement of higher risk, higher reward development type projects, flips, buy to sells, these sorts of things. So,
and those are normally short term, relatively shorter term?
Correct, yes. So to give you an example, high yield, so higher risk, higher reward. So we had one in Streatham in 2017 that we did, was meant to be a long-term development. So we submitted planning applications for it and actually got an offer within a 3-month period, which provided a pretty substantial return to investors. So there's the sorts of opportunities that we get.
What kind of returns are we talking about?
That was a 17% net annualised return. And then on the flip side, a couple that we've done this year are the longer term developments. So we've had the planning permission accepted and the development has begun. A purpose-built student accommodation up by Teesside University. It's around a 14% net return. A 1.4 million fundraise that we did. That is 5 months in, and alhamdulillah progressing very well. So we're trying to be the one-stop shop, if you will, for real estate investment opportunities, whether it be on the lower end scale where you're still earning a minimum of a 6% net yield per annum, versus the juicier, higher yield, higher return type deals.
So, I mean, I'm just going to chuck out a few questions I had, a few blockers, if you want to call it that, because that'll be helpful for everyone. So one thing is, I mean, I don't know the market as well as you. I just wanted to check, is there other mainstream players out there? Because presumably the Sharia piece is that there is no debt. And I know a lot of mainstream providers, they provide debt, peer-to-peer financing. Are there people who are just doing pure equity out there at the moment?
As far as I know, dual regulated, because we also have a Sharia certification as well. No, we are the only officially certified from both the FCA and a Sharia certification as well. There used to be quite large players in the market in the equity space. Property Moose was a name that got banded around quite a lot. They actually also had some information on their website around being Sharia compliant. It was always up for discussion whether it was or not. They since have moved to a debt-based model as well, as have Property Partner, who started equity-based as well.
Interesting.
Shifted over to the debt-based model. I think that seems to be quite
Do you think you would do that?
There has been talks of it. We've had some discussions with some Sharia compliant financial institutions in this country and abroad. For us at this moment in time, it doesn't fit into our business at this moment in time, purely because we're trying to offer this truly equity based and what we decided to call ourselves, rather than Sharia compliant, Sharia based. So not taking traditional or existing structures and wrapping them up in whatever fatwas or whatever you have to make happen. We've had 3 core principles at the base of our business. So sharing in risk and reward, no interest, and no adverse uncertainty with our products, which is why we chose real estate. So I'd say, back to your question in terms of competition, there are mainstream players in terms of the property partners of this world, House Crowd, but in terms of the niche market that we're going after, halal investment opportunities, truly ethical and no debt whatsoever. Alhamdulillah, I'd say we're the market leaders.
Fantastic. And so there's a few things I want to follow up. So those guys, do they offer equivalent returns or better returns? I know they've got debt. Presumably that comes with a little bit more liquidity as well.
Yeah, I think that's one thing that definitely helps them is the liquidity aspect. In terms of returns, we're very competitive in nature. We are there or thereabouts against all of them.
Great.
It obviously does depend project by project.
Yeah, of course.
But we strip back all of our returns and provide net returns, which is not something that anyone else does. So you may log on to their platforms and see these fantastic gross figures that they provide. Whether they're attainable or not is a different kettle of fish.
I see.
What we decided to do was the exact opposite and actually be extremely conservative and provide net returns, which is associated with all of our fees and costs are clear, transparent for everybody to see, and hopefully to actually at the end overachieve. So the first asset that we went live with in Gravesend back in 2016, that is coming to the end of its investment term. We projected around about a 40% net return for that. Based on the RICS valuation, it's actually looking at around a potentially 60% net exit. So that's what we were hoping for, that we underestimate and overachieve rather than what seems to be done in the industry, which is the exact opposite.
The other question I had was around liquidity. I know you have some plans in the future to deal with that, because I think to scale this thing you need liquidity. Otherwise, I speak as a personal investor. I invest with Yielders a little bit, and I need to be careful about locking too much money away.
Of course.
That I won't be able to get out for a mortgage, deposit or something in the near future.
So I think there's two things to that. We have got an automated secondary market, which from all we can provide as an example is extremely liquid. We've had a few people over this year, it hadn't happened before, that they actually wanted to exit in between an investment term. We listed them on the platform, and within that same month they got sold out, which is fantastic. Obviously completely understand that going forward as this increases, that liquidity needs to increase as well. And I think one of the main strategies going forward is going to be looking at an AFM model, so a fund-based model, which would provide a better level of liquidity than we've got available at the moment. But for the time being, definitely I think there is enough liquidity for the everyday investor. Should they want to liquidate, there's the ability to get out. We've not really had anyone that struggled to sell their shares.
Great. And what's the kind of long-term vision here? Like, where do you see Yielders going? What's the, is this a business that could do, is this a potential unicorn?
Inshallah, why not? If we don't have that sort of drive and determination within us, then who's going to, right? I think there is definitely potential for it. Being the first business of our kind, effectively, Islamic fintech wasn't really a term widely used before. I'd say maybe even 2017. So I think there is potentially huge opportunity. Estimated global Islamic economy of $3.2 trillion, which is we're barely even scratching the surface of. So there's a massive opportunity, and it's it's going to take someone to be able to delve into that. Obviously, we've mentioned the Series A funding round that we're going for now. Being bootstrapped and having a small fundraising round up until now has been great, because we've managed to prove our concept and grow organically up until this point. But I think we're at that point as a business where we really like to push a strategy and drive forward. Everyone's been able to see what we've been able to do with little or no money. Now with some funding behind us, I really think, not to sound corny or anything, but the world is our oyster.
Is that actually the strategy here, the international outlook?
Definitely. I think initially we want to continue to execute well in the UK. We've got some pretty big exits coming back end of this year with the development projects. So I think the UK is always going to be a core focus, and we're always going to execute well here. But we've always had a lot of interest from other regions. GCC, for example, they know full well what we're doing. We won the Islamic Economy Award for Money and Finance. back in 2017 as well. So that region is fully aware of us, and we're mentioned at a number of keynote speeches and events wherever we go, all over the world, which is obviously fantastic. We've also worked with a number of regulators in the region. The only thing that's ever prevented us from ever being up there is actually having an actual presence there, which obviously comes at a cost. The team being fairly small over the last few years, we've focused and tried to execute here, but that has always been in the pipeline because we're so well versed with the regulators that I think going out there and being regulated shouldn't be an issue. Finding the correct deal flow partners out there, because obviously we don't have a lot of local knowledge, is going to be a focus in the next 12 to 18 months, definitely. I think the UK is still a massive, huge opportunity for us. UK real estate is a massive opportunity. People look to invest in UK real estate because of its traditional increase in value and strong yields. So I don't think that's ever going to fade away. We'll always predominantly be UK based, but there is definitely a view to further afield.
I mean, here's another thought that I just wanted to bounce off you. So as you scale, you need to invest more money into more properties, right? And in order to do that, you need presumably more high net worths who can do that because property is quite expensive, or you just need a huge amount of mass scale on the retail end. And there could be, someone could say that, well, can't the high net worths just do it themselves? Because the appeal for you, with what you're offering is that you can own a piece of quite a large, expensive property. And if you're a high net worth or ultra high net worth, you've got that money lying around, you might want to do that yourself. And I can think of a few reasons why they want to go with you, but I want to hear what your thoughts are.
No, of course. I think what we've definitely noticed, and we've been very lucky in terms of having one of our co-founders who's got about 15 years experience in property, in real estate development, acquisition, and it's a very tight-knit community. Whether you like it or not, it's almost got a bit of an old boys club type mentality in terms of the off-market deals and being in there with agents and developers. So we've been really lucky in that aspect, and I think that's probably the biggest draw is the deal flow that we're actually able to bring to the table. Now, earlier on this year and sort of back in the last year, we also signed some deal flow partners. So we've now got pretty much an open pipeline between a developer, which is UK wide, that they constantly, almost on a weekly basis, providing us potential opportunities that we put through our investment governance cycle and decide whether we're going to acquire or not. I mean, I think that's what really sets us apart. Not only that, but also the transparency that we provide in terms of when you sign up to be involved in any of our deals, you get a clear view of everything that's involved, everyone that's involved, and all of the nuances that go in and around real estate acquisition and development. And I think that provides people a level of comfort. At the end of the day, when people are parting with ways of cash, they want to understand two things. I think that we've sort of hit the nail on the head with is safety and security, to make sure that their money is in a safe place, and competitive returns. So we've managed to do both of those things. I think the FCA accreditation obviously really does massively help with that. But not only that, the transparency. So when you're ready to invest, you get a profit and loss document with each of your investments, which is everything that's associated with the deal. So there's nothing we're trying to hide or add a little fee here or there. It's very transparent and clear for everybody. And then the ongoing management. So there's monthly comms that go out. You get a monthly email every time you've got rental income. With the development deals, a monthly one page just to show you how that development's gone on. So it's effectively a very easy way for you to be able to invest your money rather than if you think about doing it yourself. There is
hard work.
6 to 8 week period alone just to even acquire, and that's if you're lucky, if you've got some good solicitors and you're ready to go. So I think we've just taken away that hard work and the element of difficulty that comes with it.
And arguably you could say, I mean, the reason I thought of was that it gives diversification that wouldn't otherwise be possible. So even if you're a high net worth, you've got 100 million and you're going to stick a few million into each property, that's still going to be fairly you can't do due diligence over 100 properties, or even frankly 20, 30 would be pushing it. Whereas with yielders, if you put a segment of your assets into yielders, then and you're comfortable with yielders' process, then that kind of takes care of itself.
Precisely.
Do you have like an automated investment
It's
mechanism?
coming, so there is a whole host of fantastic new functionality pieces that we're adding to the platform. It's in the pipeline. We're up to a stage now we do releases development-wise on almost a fortnightly basis, which is another fantastic win of having the tech all in-house. But yeah, there's plenty of cool financial sort of functionality things that we're looking to add. Automatic investment is one of them in the future, inshallah. Also zakat payments. So that's something that we had a lot of conversations with, obviously Ramadan, which was just around the corner, that we've just had a lot of conversations around zakat. So that's something that's in the pipeline as well.
What do you mean by that?
So we've actually created a document online now which helps people understand what their zakat payments associated with our investments.
The rental side of
yes,
it. I see. Right,
so we'd almost create the functionality to be able to allow you to pay zakat from your yielders' investments, whatever that may be, and directly into your overall zakat payment as well, which would be something I think would be hugely
that's really clever,
for the crowd. So yeah, there's plenty of improvements going on. You know, the great thing about, as I mentioned before, working within technology, it's always changing. You know, we're always trying to keep up at pace with what's going on. And yeah, there's a lot to come.
So just a few final points. So what's the kind of, like, someone wants to invest in you guys, where can they find you? And what kind of valuation are you raising at, that sort of thing?
Sure. So the website is www.yielders.co.uk. Yielders and Yielders UK across all of the social media platforms. The website is fairly easy to use. As I said, within a 5 to 10 minute period you can create an account and buy a portion of income generating real estate, which is pretty phenomenal in itself. Obviously there are people online on the phone and on the automated chatbot should there be any issues. We are raising at a 10 million valuation. We've launched a small portion of that on pre-money, yes. We've launched a small valuation of that portion of that onto Cedars, which is privately live at the moment and will go public as of tomorrow, inshallah. The actual raise is a £2 million raise. Whether or not we go for the total round or not is going to be dependent on how much we feel we need. Again, the documentation, everything available around the raise is readily available should anyone want to have a look at it. And effectively within that, it just provides a lot of detail around our journey up until now, the projections for the future, the strategy. Predominantly, as I mentioned, the AFIN model. We're also looking at ISA and SIP products, which would again be a fantastic win for us. And then further penetration globally into the Southeast Asian and GCC.
All right, say something more about the SIP, because I think that's an important point.
Yeah, so we've had initial discussions with the government around SIP and ISA products, pension products.
Self-invested pension plans.
Correct. There isn't an equity-based product for that yet. We're in a fantastic position of obviously being a regulated investment product. And I think when we roll into the AFIM structure, those conversations are already open, and we're looking to roll out something for that specific product, which I think would be a massive win. A halal SIP product, which is completely equity based, with the returns that we're able to offer as well, I think would be a huge pull for the community.
And do you think that long term that could, if you do some kind of REIT, could that then plug into mainstream pension providers as well? I wouldn't see why not. I think obviously that's probably 18 months to 2 years down the line, but we are looking shifting towards a fund-based model. I think both from a liquidity perspective and a returns perspective, if we're able to have single SPV structures at the moment with a 6% net return, pooling a few of those together, we'd be in a pretty strong place. Bumping up that percentage point a bit more.
So I think it's a really, really exciting time for us. I think that we've managed to do 75% of our raise on Cedars as of today without even going public. Which shows some huge traction, and inshallah as soon as we go live we should fund and hopefully overfund as well, which is something that we're looking to do.
That'd be really good. Two more things. One is, so as you go into the REIT space, are there Sharia compliant players already out there who operate on 0% debt?
I believe there is. I don't know whole well. There are abroad players in the market. The UK, not entirely sure of competition wise in terms of the REITs, but again, I think our product is pretty strong, and the returns speak for themselves, not only from a Islamic finance space, but even a traditional finance space. And that's one thing that I think we've always tried to do, is not just pigeonhole ourselves to only Islamic finance or the Muslim market. The name speaks for itself. It's open for investment. It's an ethical and alternative investment opportunity, and I think that's something that we're extremely proud of. Because one thing that Islamic finance has always missed out on is, how do we actually compete with traditional finance, both from a returns perspective and transparency and effectiveness. So that's one thing that I think that we're really proud of here, is not just an Islamic finance product. It's a product for everybody, and hopefully that sharing economy will help increase the Islamic finance economy within itself.
And then final question, what do you think is your kind of secret sauce, or the thing that you think 10 years down the line you'll look back and you'll say that was a key ingredient, or those were the key ingredients that led to this inshallah phenomenal growth?
I'd say it's probably based on a couple of things. I think the team that we've got, we've got a fantastic group of individuals who have worked tirelessly to get us where we are today, and we've created a really family sort of based environment with what we've got, and then the genuine belief of what we're trying to do. This business primarily was born out of frustration, being a young professional in this country and not having a halal investment opportunity, and the barakah that comes with that. I mean, one of the biggest wins for us is when we go out and we speak about what we do, and people understand it, is the effective prayers that they do for us. So many times we've finished an event and people have just come up to us and just said, really, really appreciate what you're doing for the Ummah and the community, and that for us I think is the biggest win.
It is,
regardless of what happens in terms of the financial aspect. If we're able to provide a service to the Muslim community and further afield, then that for us is huge.
No, Jazakallah khair, Zishan. And inshallah, I wish you the best. It sounds like it's really going well, the fundraise, and I'm excited to see where Yielders get to. We actually work with Yielders on the inshallah we're shortly going to be doing an article on you guys.
Look forward to it.
This podcast is part of getting people aware of Yielders and what they offer. I'm a big fan of the products that you have. I mean, I invest with you guys myself,
and that's the biggest litmus test, really, isn't it?
Yeah, exactly. And I think you actually you compare favourably against others as well, that we've covered on our website. And I think the fact that you guys you're on the ball, you're communicating, your process is slick, and I think your customer service is good. Those actually are really key things in the Muslim economy, where historically it has been a big challenge. And I think that's a really big selling point. So do check out Yielders. In the podcast description we'll share the link, link below. And good luck.
Thank you very much, and thank you for the opportunity. Really well appreciated.
Jazakallah khair, Zishan. Assalamu alaikum wa rahmatullah.
Wa alaikum assalam.